Okay, Ezra, I think you're my number
Yeah,
one YouTube fan. I think you watch every video and you always make very kind comments. So thank
sure thing. No, I really enjoy your videos because you kind of trade almost the same way I trade because I also use Fibonacci. I use trend lines, moving averages. So I can really follow along and I can apply what you're teaching. So it's very valuable. And it's important in this industry to find someone who trades like you. So you don't have many contradicting ideas. Because everyone trades differently. So when I found you and I'm like, okay, this is the way I'm going to stick to this.
thank you. And do you follow anyone else?
Yes, I do. You use for more of the technical side, more of the psychology side. Then I follow some other, I follow from Yoga as well because
Good.
of the way he just approaches the markets. It's very ruthless. One very vital thing I learned from him was the difference between professionals and and novice traders when it comes to holding their trades. That aspect where you see you're in profits and then you get scared. You're like, oh, let me get my profits. That's the time when the professionals are like, okay, let me add. If it starts coming back against you, they're like, let me add some more. But then the novice will be like, oh no, I'm losing my profits. So that idea really helped me a lot. It's subtle, but it's very powerful.
A really interesting point. So what you're saying is he suggests that you actually average into winning trades. So you have a position that's winning, it pulls back a little bit, you're still in profit, but then add the position on the pullback and then wait for the next wave. And then you ride the next wave.
Exactly.
Wow.
And I agreed with that because that's against the way my emotions are telling me. Like, because he emphasizes the fact that what you feel as what you should be doing, the opposite. So if you're a prophet, be confident. Be like, okay, the market telling me I'm right, so I'm going to push this. And the moment you're in losses, you're like, I'm wrong, and get out as quickly as you can. Accept the stop loss and be out. Because in the past, I'll be hoping like, what? Let me just get back. Even though I just took a loss, let me just get back. I might be right, but I'm losing. But then on the flip side, when you're wrong, accept it, get out. But when you're right, push it. I will keep pushing it. Okay, safely, of course. Don't just push it just for the sake of pushing it. Just you have to do it safely
Have a
within
plan
your risk
how you're going to
parameters.
do it.
Yeah, have a plan.
Not just
Yeah,
random, spontaneous
exactly.
jump adding to the position, but have an actual plan before
Yeah,
you open the trade on how you're going to add to it.
yeah, exactly. Like you should already know, even before you're even in a trade, before you even get filled, you should already know that if it goes in a position, I'll add here. And then I'll get my profits here. Like you should already know the whole picture so that nothing surprises you.
Yeah.
That's
Trading is
yeah.
basically a series of business transactions. So you wouldn't go into a business deal without thinking it through and how your exit strategy. People don't think like that, unfortunately. So many people come to me and say, oh, I've just bought gold. Where do you think it's going and where should I get out? And I'm thinking, why are you in this trade if you've no idea what to do with
Yeah.
it? You should be asking me this before you
Yeah.
get in the trade, not when you're already in it. So those are great ideas. I really like that. Tom Hugard, yeah, he's a good guy. So that's quite interesting.
Yeah.
I don't teach that. I don't teach about average into a winning trade. So maybe I need to steal that idea from him. But I certainly always have a stop loss for every trade, and I put that in before I execute the trade. I like that. Really good point. Okay,
Yeah.
tell me more.
Like what you just said about not being able to switch. Let's say if you're looking for a buy and if you get married to that position, it's actually scary to go into a sell. But if you're able to accept the loss, let's say you hit your stop loss, you accept it instantly and can move on. Now, so it's blasted right through my support. Can I now look for a pullback into that support, now turn resistance and sell it? But if you're married to a position, you won't have that mental agility to be able to do that. And then you just end up losing when you could have actually made some money on the flip side. So that's the importance also of taking your loss real quick and switching. And that's actually what made me lose the most money last year. Was it last year? DJPY was just falling and I kept trying to buy it and I kept trying to buy it. I kept trying to buy every single pullback. Oh, this is another thing that I learned from Tom as well. He said, when the market is falling, look for sales. Don't try and pick the bottom and say, okay, let me look for, if it's going up, look for buys. If it's going down, keep looking for sales until it actually reverses. So it's like, that's why I love now. I really appreciate my losses, because that trade for USDJPY, I blew my account because I kept on trying to buy. But now I would never do that again. And that's why we need to really love our losses. It's like, I think the market is actually wants us to succeed. That's why it keeps on humbling us so much. It gives us the worst losses so that we can learn from them and then do it better next time. Because now I would never, if I see it going down, I'm going to sell it. If I see it's going up, buy it. I mean, it's what the market is telling you it's doing. So you just go with that. Don't fight the market, because if you're going with the waves, you can make money. If you're going against the wave, you're going to be humbled until you learn the hard way. Most of us
Brilliant.
learn the hard way.
And unfortunately, we do all learn the hard
Yeah.
way. I learned the hard way. I was constantly selling a market that was going up because I thought, well, it's gone up so much, it's going to come back down again, and vice versa. And then in the end, I was just like, wow,
Yeah.
I am making this so hard for myself. It took me a long time to learn from my mistakes. I wasn't a quick learner. It sounds like you're a quick learner, but you're making so much sense. Especially that you learn to be a trend follower. You learned that buying into a rising market, either by buying it at a support level on the pullback or even buying it when it breaks above a previous high, is a much easier and less stressful way to trade than trying to counter trend all the time.
Yeah, definitely. Because I think trend following, okay, to me, I think trend following is the best way to make money, because it makes sense with business, because you have to see trading. Because I'm a pharmacy technologist, so I work in a retail pharmacy. So we dispense drugs. So I tend to use the way we buy drugs at a cheap price, then sell those drugs like to the community. I use that exact model when I'm trading. So I say, okay, I bought, let's say I buy a bottle of cough syrup. We buy some cough syrup mixtures, and then the price we paid for that cough syrup, let's say, is the stop loss. That's the money that we've already spent. And you can't, that's another reason why I don't move my stop loss at all. I don't move it up and down, because it doesn't make sense to go back to the dealer and say, oh, I bought your cough syrup at 5, but I don't want it at 5 anymore. Give it to me at 4, or give me at 3. You can't. The stop loss it's set. It's set. You've already bought that commodity at the price. Accept that I've spent this much, and I've had a markup of this 30%, 20, 50%, whatever. And then I have to accept, is that cough syrup going to be bought? Am I going to be able to make a profit, or is it just going to sit on the shelves and then I don't make money? I'm looking for the people to sell that thing. I'm looking for a cheap price, buy it at the pullback, which is a discount, and then sell it to the people at a much higher price, which is, I like to set my take profit at the previous high, because I know that the market has reached that price before. So the probability of it reaching that price again is high. So the probability is on my side to reach that high. I'm going to go to a price where I know the market has reached. So I know the probability is high. That's true.
You've taken the profit, and now you can move into the next trade. You can do your next cough syrup trade, where you find supplies in order to meet the next demand.
Yeah.
I love that. That is so
Exactly.
really nice way to think about trading, because that's what markets do.
Yeah.
Look for supply. That's why they move. Markets will consolidate, which is where demand meets
Yeah.
supply, and because that's the whole point of a market.
Yeah.
Like when you have a market in your town and you go there and you buy your fruit and vegetables, you know, it's the market providing a service. It's where buyers and sellers come together. And when you've sold all your produce, you go home. You've got none left, so you go and get some more produce, and you come back the next day. And financial markets work like that. Sellers come and they find buyers, and when they do, they sit there, and the market just trades, and then eventually you run out of buyers or sellers or whatever, and the market then will vacuum and move quickly to another level where it's searching for volume.
Yeah, exactly. And I think that's why it's important to have a certain philosophy. Most people, that's why they say treat trading like a business. The way a business works is exactly the way trading works. The way you definitely need to keep detailed records in any business. You have to keep an Excel sheet recording your trades. Where did you buy? Where did you sell? What is your stop loss? What did you take profit? And having that realistic understanding of the market as a business has really helped me personally to trade well, because now Now it's not just a game where, oh, where I'm trying to get money up. It's a real
Business rather than
business
just a
model.
random spontaneous bunch of trades put together and a little bit of luck thrown in.
Yeah.
You have a business structure and you review it, you review your trades, you try and learn from any mistakes.
And what I noticed is most traders, especially novice traders, we have everything we need at our fingertips, but we just don't do what we need to do. Like the small things like keep a trading journal, record your trades, do some introspection. The basic things that we need to do, we don't do them. And if we only did what we needed to do, we'd be successful. Because it's not like this business can't be beaten. It can be beaten. We just need to do what we need to do, like follow our plan, have a trading plan.
Create a plan, 'cause so many people don't even create a plan. They put some money in their account and they're just trading randomly and they don't really know what they're doing. Like I said, they enter a trade, they've got no idea what they're going to do with it. It's just, if I feel too much pain, I'll get out. And if it's enough money in the account, I'll take the profit. So that's really that you've got to this stage now with your trading. You're really moving on and getting your thoughts processed, and you're getting a trading plan and a strategy and executing it and refining it. Well done. You're really making good progress.
Yeah, actually, I'm 2 months profitable now. So I've had 2 green months, which is good. August was a bloodbath though. July was good, positive. August was and I thank God for August because it allowed me to refine my money management rules, because I learned that losing streaks are inevitable in this business. But sometimes you're just losing 4 trades, 5 trades in a row. You're losing. But then how do you mitigate the loss? Like, how do you reduce that loss? Because you can't know that one loss is going to lead to 4 losses. So that's what I learned in August, because in August, I went to my losing streak. And so I decided to add, I didn't have any management rules in my trading plan for August. So when I lost a lot in August, I was down about, I think 16%. So that was that was a lot. So what I did is I set some rules. Like for instance, if I have a winner, okay, my maximum risk per trade is 2%. So let's say I put on a trade, I have a winner, I maintain it at 2%. Then let's say I have a loss. I reduce that. The next trade I'm going to take, I'm going to risk only 1%. And if I have another loss, the next trade I'm going to take, I'm going to reduce it by 0.5%. That way, and then I'm going to maintain that 0.5% risk for the following trades, because I don't know if I'm going to have 5 or 6.
So for every time you lose, you reduce your size.
Yes. For every time I lose, I reduce the size.
Wow.
And if I get a winner, I increase the size. That way, even if I go on a losing streak, I'm just going to be losing small amounts.
Really good.
And then when I start winning that game, I increase. And then, because most of the time, what I've noticed, yes, sir.
So I'm really interested in this. So I'm sorry to interrupt you. So let's say you have 4 losing trades. You've gone from risking 2% to 1% to 0.5% to maybe 0.25%. Yeah.
Yeah.
And then let's say you have now a winning trade. What do? Do you instantly go back up to risking 2% or 1%? How does it work?
No, if I have, so the least I'll reduce it to is 0.5%. If I reach 0.5%, then I'll maintain 0.5%. And then if I have a winner, I'll increase it to 1%. And then if I have another winner, I step back just by half, not all the way up. Yeah. So I increase it by half. Yeah, I'm still testing out that plan, but that's what I'm working on now. You avoid, because I know that
a massive hole, because some people would do the opposite. They'd actually increase their size the more they lose. But I think I love that approach that you have.
Yeah, because that way, because I know that, let's say I'm risking 1%, and I do have a winner. I know that I can still add to that trade till I get till I increase my size to about 2%, back to 2%, and I can still make that money.
I forgot, you're combining the strategy of averaging into a winning trade on top of that. As soon as it's winning and it's up, maybe it's up 0.5%. Yeah. Then the strategy of adding to a winning trade kicks in as well.
Yes. So I can still maximize on my winners while maintaining a small loss when I'm losing. So that way I just completely avoid having those, that I was having before. Yeah.
This is something I've never heard of before. I'd never even thought of. This is absolute gold. I mean, I think people watching this are just going to be
Yeah.
just some tremendous ideas for people to play with.
Yeah. So that's what I'm working on now. Yeah.
Wow. This is really, I was actually hoping to help you and have you ask me questions, but I'm actually learning from you today.
That's,
Are there any
uh,
questions you have for me today?
yes, for instance, I've read in certain interviews and in certain books where some traders say that over time, your edge can become obsolete. Like you need to be able to change your style and evolve with the markets per se. So what do you think about, like, for instance, will one day will my edge disappear? Will I have to come up with another edge? Have you experienced having to change your trading style in the past or what you can like that?
Okay, so there was a period, a long period for many years. I'm gonna call them the Obama years because volatility really kind of died before Trump came along. I just remember in my mind that that was a period of time when markets became really stable. So you were lucky to see a 30, 40 pip move in a day. And when you did see that, it was a slow move, boom, 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 up, and then close. It wasn't like he was going
Yeah.
up 30, down 20. It literally was one slow move in one direction. I was like, wow, this is difficult. You've got to get the direction right on
Yeah.
the day. You're not getting a second chance to get in. There's not much volatility. And even when you're right, you can only make 20, 30 pips. But you've got to really cut your risk down to risk 10 pips, maybe 15 pips. So things like that can happen where you have to change your strategy. For me, the big one is when markets are trending as opposed to consolidating. That's a big strategy change. You've got to be nimble and you've got to be flexible.
So it's more in terms of volatility and market conditions, not
I think so.
necessarily like trend following will go or will stop working or
No,
trend pullbacks will stop working type of thing.
we may be in a situation like we are right now where there are not that many trends. I mean, trying to find a trend in Forex is quite tough. Dollar pairs have been going sideways for a long time. There will be times when you don't get the setups that you want, the trends that you like, so then you have to be a bit more flexible. Or you just have to be prepared to say, okay, it's not working for me right now. That,
Yeah.
it's know when not to trade, when not to have a position on, because when the money comes and the setups start to work, the money comes in quite quickly. Like, I love that
Yeah.
strategy you have of controlling your losses because we all have periods when we just can't get things right. The key is
Yeah.
to not push it when things are not working for you, when your edge isn't working. But you've got fail safes already. You've already got clever
Yeah.
structures that stop you getting yourself in trouble and tell you when to quit. So that's amazing. Oh, that's another thing.
Yeah.
I meant to say.
Yeah.
So, is there a stage at which I love the way that you reduce your size? Is there a number of
Mhm.
trades that you'll just say, okay, I've had 6 trades that have lost in a row. I'm now just going to stop because I don't know what's going on, and I'm going to wait until I've got a better idea. Is there anything like that you've incorporated into your strategy?
Okay. So yeah, actually that's something I've been thinking about. I think because for now, I don't think I've got very systematic way of stopping myself. But now what I do is I just have like a limit. Like let's cause personally I take 1 to 2 trades a week. If I take 3 trades, if I lose 3 trades in a row, then I'm done for the week. That's the most I can lose. If it happens, let's say on Monday or Tuesday, even on Tuesday, if I lose 3 in a row, I'm done for the week. Then I'll move to demo because I still want to trade, but then I won't put any live trades on until the following week. Yeah. And then also on the winning side as well. So right now I'm trying to go for 20% a month. That's my goal. So I have 5% a week. So if I make my 5% that week, then I'm done for that week. Again, I switch to demo. I start trading demo. And then that's what I do.
I love it. So you're still practicing and learning on the demo account, but you're not taking too much risk,
Yes.
and you're then also taking the risk of blowing the profit once you've satisfied yourself and hit the target. I've got one more question for you. In August, you talked about a difficult month and you
Yeah.
were down 16%. The trades that you were
Yes.
doing, were you satisfied with the trades that you were doing? Did it just not, with the conditions just didn't work for your strategy? Or did you feel that you hadn't stuck to your strategy? You had some indiscipline?
So for August, for the most part, I was still sticking to my strategy. but the market conditions were just not favorable.
Yes,
Yeah.
I've got in the 5-day challenge, I talk about clean trades. If you do a trade, you stick to your rules, you're disciplined, you're patient, you stick to your strategy. If it doesn't work, you still feel satisfied. You still think, I did everything right. The trade didn't work, no problem. And you still feel confident to go into the next trade. Whereas when you mess it up and you're guessing and you're not sticking to your rules, then I think the confidence gets hit. And then the next one you think, oh gosh, I
Yeah.
don't know what to do. So I call them clean trades anyway, but it sounds like you were doing them. That's really good. Oh, one thing I'm going to tell you, August is a very difficult month. I've often struggled in August, and it's simply because,
Yeah.
of course, holiday season in the Northern Hemisphere, so many of the bank traders, hedge fund traders, whatever, there's a lot that, volume is reduced. People are not putting on positions like maybe they would do at other times of the year. Remember next August.
Actually, one of the guys I follow, he said that he was telling the students, don't trade August. August is crazy. I'm gonna lose money. So I was thinking, well, if I avoid it, then I'm not learning anything. It's
Right.
better I trade it and I lose money, and then I gain that experience, and then use whatever I learned from August to then fuel my experience. So that was my mentality going into August. Like, I'm gonna trade it still so that I can learn. So even at the end of August, I was like, okay, I'm proud of myself. I had a nice losing streak, and it's gonna help me, because right now I know that losers are actually the ones that help us. We need the losers in order to grow. Because if you're winning, you just get very proud, and you think you've figured it out, and then you're going to lose probably after that.
I figured out on the trading floor 30 years ago, I was like, wow, I only learn when I'm losing. Didn't mean I actually embrace my losers. I hated losing money, but it's so true.
Yeah.
You only learn when you're losing. You don't really learn when you're winning.
Yeah. What's your thought on like having like an arsenal of strategies? Like, do you think someone should just have one strategy that they can adapt to the market with, or maybe to have like maybe 2 or 3 strategies? Like, can you still be profitable long term with just one strategy?
I think that you have to be able to adapt to market conditions. I don't know whether that specifically means that you have to have 2 or 3 strategies. So I'm going to try and differentiate between having different strategies and trading under different market conditions. So a strategy might be, in the morning, I'm going to trade the opening range for the first hour, and then you learn specifics of how to do that and things that might work. Or I'm going to trade a breakout of the opening range of the first hour or something. That could be one strategy. And then you can have another strategy, which is trend following. So in that respect, there's nothing wrong with having 2 strategies. They can be completely separate from each other. I'm not saying that they should necessarily just be a time-based strategy. I don't know. An experiment, why not?
Yeah.
But then also you have to be nimble and then be able to adjust to different market conditions. If volatility dies and we're only moving 30, 40 pips a day, then obviously you have to be able to adapt to that. Or if markets have been sideways on a day for weeks, then you have to be able to adapt to that and be ready to change when you get a breakout of the sideways consolidation and maybe a swing trade opportunity is showing itself, and you have to be quick and go, right, this could be the breakout trade.
So I developed actually 2 strategies. So I have a trend following strategy. And then I thought, well, okay, so it's either the market's trending or it's consolidating. I also wanted to ask about philosophy of why the market moves the way it moves. Like, do you have a specific idea, like a philosophy about the markets? Like, why does the market move the way it moves? What are the underlying dynamics that make the market move in the way that it does? And the importance of actually having a philosophy of the markets and why do they move? Is it an algorithm that's moving them? Is it actual buying and selling pressure? How the market actually moves and why it moves?
I think you're asking me, is there an element of the market being rigged, or is it just genuine order flow? Is that what you're saying to me?
Yeah, I think that's what I'm trying to bring out.
Yeah, I'm not a corporate guy. I haven't worked at banks or hedge funds, so I don't really have an insight into how much the market is rigged or how much the big players try to push the market around. I can't really give you a comment on that. What I do know is that with computer trading, algo trading. I thought eventually technical analysis would just go out the window. And here I am 15 years later from studying technical analysis, and it still works for me. Believe it or not, I still learn, and the experience counts for everything. The fact that technical analysis still works, the techniques still work, the tools that I use still work 15 years later, I think it tells you something that the dynamics of the market haven't particularly changed.
It doesn't really matter what makes the market move. Just
No.
so long as you get to trade it. Yeah.
As long as my technical analysis
A lot of
techniques work, I couldn't care less what drives the market. As long as
Yeah.
my trade opportunities work more than 50% of the time and my risk reward ratio gives me a greater return on my winners than I lose on my losers, then yeah, I couldn't care less. I will start to worry about it when my strategies don't work anymore.
Yeah. Good answer. Okay. Well, did you have any other questions here? Yeah, I'm not so much of a fundamental analysis guy. Price tells the whole story. But do you think it's very important for you to understand the macroeconomics and what interest rates are going to do? Are you supposed to follow to the T? What is the Fed going to do? How important are the fundamentals to profitability?
I'm aware of it, and I think I understand economics quite well because I've just been doing it for a long time. I learned about economics, but I don't trade news events, and I actually advise my subscribers don't trade over news events. Although I understand economics quite well and I understand how all the numbers drive the economy, I don't think that you need to worry about them as a trader, especially as a short-term trader, a big macro trader who ran positions for weeks and months. Maybe I'd need to know, or if I was a very long-term investor. But even Warren Buffett says, he doesn't really give a damn what's going on with the economy. He just buys companies that offer good investment opportunities. He has his criteria. He doesn't really care about the economy. Right now, to me, it seems like there is a strong chance that we're heading for recession. Stock markets are just not interested, near all-time highs. They're not pricing in any risk of recession whatsoever. I just go with the theory that the fundamentals are already priced in, because also we can't process that much information. We can't possibly absorb everything that's going on geopolitically, macroeconomically, and process it to a conclusion of where markets should be priced. It's just not possible. Interestingly, when I was on the trading floor, we only had one Reuters screen in the pit. So you'd get a news feed, but it was the guys in the office that had the Bloombergs and everything else. So sometimes we didn't know what was going on. The markets would be moving. You'd be like, what the hell's going on? Why is it moving? We'd find out 5 or 10 minutes later. Nowadays, we've all got access to the same information that those bank traders would have had, because we've all got Twitter and everything else. Twitter sometimes gets news stories before Reuters or Bloomberg. So, but again, how do you process all of that? Do you have 4 different news channels out there and 3 different social media channels to try and keep in touch with all the information? I can't do that. So I just purely stick to technicals.
Yeah, I tend to stick to the technicals as well. And I set some rules around the news. For instance, if I do have a trade on, I'll leave the trade on. Maybe I'll move my stock to break even if the news is coming out, or I'll trade just in the morning. Except it's very difficult for me because I'm a swing trader. So I can't just trade for the first 3 hours in the morning and then when the news is out. So I'll maybe have a trade on Tuesday, but then let's say Wednesday, there's CPI. So I'll just leave it to run. And I find that most of the time, the market will already be priming itself to move in the direction of the news. Like you said, the news is already priced in.
The term trends will remain intact. It would take a lot of economic numbers, a change in economic numbers, to actually reverse a strong trend like that.
Yeah.
That's why the stock markets are still strong. We've been in multi-decade bull run for the stock markets, and they're just not interested in pricing in any risk of recession at the moment. The stock market just don't care.
Did you start with Forex or with the stock market? And how was it to trade? How easy was it to trade both markets? Because I only trade Forex, and I also want to go into stocks in the future. Is it a big change to trade stocks as opposed to Forex, or is it just the same strategies?
From a technical analysis approach, I don't think it matters. I think a chart's a chart. On the trading floor, there was a contract called the German Bund. It still exists. It's the German bond contract. Some of the bond traders didn't even understand what the hell they were trading. They knew it was a German bond. They didn't understand really what this contract was or what it meant. They just knew how to trade a financial market. They knew to buy at the bid, sell at the offer. They knew how to scalp. They understood the mechanics of the market. They just didn't necessarily understand the mechanics of the contract. So I remember someone was interviewed on the floor by some news company, and they were like, "Okay, so and what are you trading?" "Oh, it's German bond." And you go, "Okay," and they were asking questions about the German bond contract. He was like, "Mate, I don't know. I buy at the bid, I sell at the offer, and I go home. I make a couple of grand." He just didn't care. He just knew how to trade the market. So I think maybe that's a useful story. It doesn't really matter what you're trading as long as you understand how it moves
Yeah.
and
Yeah.
you have a strategy that works.
Okay. All right. Well, that was insightful.
Okay. For me too. Thank you so much. I really appreciate your time. I think we need to do this again in
Sure.
6 months. I'd love to see your progress.
Yeah. So definitely. Let's do it again sometime.
Okay, my friend, I will look forward to your next comment when I release my next video.
All right. Sure. Thank you.
Bye bye.
All right. Bye.